So today I'm going to be showing you the market manipulation strategy. So this is where you use market manipulation to your own advantage. When the big players are trying to manipulate the market, you relax and use it to your own advantage. Let me show you real quick. So first of all, what is market manipulation? I'm going to explain right here on this chart. So you can see we have a very strong support in the market. This is a 4-hour chart. So this is former support here. And we still have a support forming around here in the same zone of the former support. So on the H4, this is actually a very solid support zone. So price came here and is showing all the signs of a reversal, reversing from the support zone. So usually what people would do is, so people are going to put orders in this zone and put their stop losses around the bottom of the zone this way. So people might stretch up their target to get here and put their stop losses around here, just under the zone. That's what people usually do. And guess what? The big market players, they know all these tricks. They know this is a solid support zone in the market. So price is definitely going to reverse from the same zone. And retail traders are going to trade it and put their stop losses right under the zone. That's what usually happens. So let me show you what is market manipulation. So one, you can clearly see what happened there. Price went up from the zone. However, before it left the zone, it actually went down to take all the stop losses. That is what we call market manipulation. That is market manipulation. Let me show you another market manipulation. Let's go. So you can see on this chart, price is reacting to this trend line. So we can see the first touch of the trend line. There is another touch of the trend line. We've got a third touch of the trend line. So basically, price is actually reacting to the same trend line 3 times. So we know the 4th time price comes to the trend line is definitely going to react to that trend line because it's actually becoming a strong trend line in the market. So we are currently on the same trend line. Price has slowed down. It has lost momentum. It's now showing signs of a reversal. This is a doji candle. We've got our first bullish candle. It's not so bullish, but this is a clear sign of reversal. So usually this is what people will do. Let me show you what people will usually do. So people would buy from here. The orders are going to be here and the stop loss is just going to be below the zone. This is what people will usually do. Stop loss below the zone. The TP is going to be here, or let's say the first TP is going to be on this zone here, and the next TP is going to extend to the top of the trend line. Yes. So let's see how these plays out. Yeah. So as you can see, price actually went to our direction. It respected the trend line and it went up. However, we can see what it did down there. It went all the way down, 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 and took all the stop losses in that zone. That's what we call market manipulation. Everybody knows price is going to reverse from that zone. However, price is still going to dip down, down, and down. Take your losses before going back to the normal location that it's supposed to go to. Yeah, so price has actually hit the target here. Our TP has been met. However, most people are going to be thrown out of this market. This candle here, this wick, is going to take out everyone from this market before the market actually sets off. So the question is, how do you handle market manipulation? How can you be able to get out of this situation? How can you handle this so you will not fall a victim to market manipulation? I'm going to show you now. Before we get into the solution, kindly subscribe to the channel and also press the bell button. Let's go. So the first solution is, what you're going to do is you're going to use risk management. So you're going to design your risk management in a way that your position size can factor in a big stop loss. So in this occasion, instead of putting your stop loss right here, you're going to think of market manipulation. Am I still going to be in my position if the market gets manipulated? You need to provide for that. So by providing for market manipulation, you're actually going to extend your stop loss down based on your risk management. In this trade, we have 83 pips profit to take. 83 pips profit to take. So the risk reward here is 2.8, which is fine. So based on this large reward you're going to be getting, you're going to have about 30 pips. It's down here. You can see here 29.2. So you're going to have like 30 pips stop loss. 30 pips stop loss compared to 83 pips profit is fine. That's approximately 1 to 3 risk reward ratio. You factor that into your risk management. You factor the big stop loss into your risk management. So it provides for covering in terms of market manipulation. That's how simple you can get away with market manipulation. You replan your risk management. Put your stop loss at a zone where market manipulation won't touch it, and reduce your lot size so the lot size can cater for your big stop loss that you've provided. So the next way to deal with market manipulation is by testing the market. We call it market testing. So what does it mean? So if your original plan is to do a one lot for that position, what you're going to do is you're going to put only a half lot for that position. You're testing the market. So let me take this out. So let's say at this zone here, you want to take it from this zone. Yeah. So you take it with a half lot, with the mind that if market manipulation takes you out, you're still going to come back to the market, wait for a retest. That's after price has left the zone. Let me show you. So in this occasion, you're going to wait for price to do 1, 2, 3, and that's it. So you're going to wait for a retest. Price would leave the zone, make the first move up, make a new low. Based on that low, based on this low here, this is where you will now come into the market after market manipulation has taken you out from this zone. So you've tested the market with a half lot. If market manipulation does not happen, you leave the market to run. If the market reaches this spot and it retraces back, you can add the rest of your lot. However, if market manipulation takes you out at this zone and market moves in and comes back for retracement, you cannot put your one lot in this retracement zone here for the market to go up with it. So I've discussed two solutions to market manipulation. The first one is you factor in a bigger stop loss so that should reflect on your risk management. Apart from that, you test the market first before half low. You let the market move. If it moves in your favor, you wait for retracement, then you add the rest of the lots that you wanted to add. It's that simple. There are other ways, but they are actually quite dangerous. So I'm actually suggesting the two safest ways to deal with market manipulation. If you can actually master market manipulation, you're going to have a lot of success in the market. I promise you that. A lot of success. Thank you.